What's going on, everyone? Welcome to another weekly review. And yeah, another profitable week. You can see about 1.4, 1.5% up for the week. Two positions taken this week, both on JPY, one long, one short. I'll take you through those in a bit, just because it was a bit of a shorter week this week. I was very sick this week. And so I was only really trading up till Wednesday. And then Thursday, Friday, just wasn't in the market at all. Did do a live back testing session on Thursday. That just went over all the missed trades from last week. Check that out if you haven't already. Yeah, some good kind of nuggets and lessons in that. And just some good perspective, I think, on how the challenge is coming and like my general sort of frame of mind. So yeah, I think just to recap this week, what I did really well is that I was less restrictive on trade parameters, and I was kind of just ready to execute straight after the kill zone open, in alignment, obviously with the plan, even though there was a bit of uncertainty. And this trade in particular that led to this insight was the win that I caught. So that was London session on Monday. That kind of just showed me that opportunities do exist on a Monday. That's something that I should try not have as like a belief system that you can't execute too early on a Monday, can't execute too late on a Friday, especially with Alpha Capital that allows me to hold over the weekend. Um, that's something that I would rather the data show me that my positions don't generally play out when that's the case. So yeah, that was something good that we kind of just did this week. Mistakes, look, there weren't too many. I think I wasn't as conscious in terms of forecasting multiple scenarios on pairs, um, as well as then not very consistent with my New York kill zone sessions, just because I would obviously wake up, and I don't know, maybe it's just a personal thing, but I normally, when I'm sick, like I kind of feel better in the morning. Then as the day goes on, I become more like conscious of my symptoms, depending obviously on how sick I am. But that was kind of the case more Tuesday, Wednesday, where I'd forecast London and like be very active. Then by New York session, like I'm just feeling sick and like knowing that I can't, or rather just shouldn't be uh, as like focused on like work and stuff. And like I kind of took it slow in the afternoons. So yeah, that's just something that I want to be more conscious of going forward. Like if I'm going to commit to a trading session or a trading day rather, then I should do that. But if I know that I'm not feeling well, maybe I only have bandwidth for London, then I should be clear with that from, the start of the day to say, I'm going to forecast London, but I'm not going to forecast New York, so that I'm not kind of on the fence and like a bit wishy-washy with my focus during the day. And I can give one session my all and know that even if I miss something in the next session, I'm not regretting it later because I know I made the decision beforehand to kind of switch off after a certain point. Um, and some things I learned from things I did well, mistakes I made, and this I'll go through I'll take you through just on a high time frame the positions that the plan can be met, but volume may indicate otherwise. So I'm kind of just trying to observe the 4 hour candle closures sort of before, during, and after when I execute, just to see if there's any correlation in that kind of needs more attention. Because yeah, we did protract higher on the particular trade that resulted in a loss, but the structure was ultimately invalidated. And so yeah, when I come to what the one most important thing I can do on improving this week is observing that 4 hour candle closure before, during, and after my entry's been executed. And just being conscious of this, on the day, during the trade, not just in hindsight. And the one most important thing I should continue doing this week is, being less restrictive on those parameters, on that stop loss placement, because I want to be more open to executing positions and building that data. I've had it, consistently over the past 3 weeks, that I've been doing the challenge, two trades per week, which is good. That's about the average that I take per week. But yeah, should be open to taking more than that. I don't want to, there's a lot of trades that I've also missed, both winners and losers. And so I think the more data I can collect, the more, I can begin to refine the plan heading into the next data set. Regardless, we're going to get to 20 before we do that, but that's just something to take note. And then the Alpha Capital, account metrics just for that transparency. Current equity sitting at 1.8% in profit. And yeah, this gives you an overview of just how we've gone over the weeks. First week with that drawdown, second week with the drawdown recovered, and then this week with the profitable trade, and then obviously the trade that was a loss, 2 trades per week. And then I'm not too sure how they calculate their stats and stuff, but it just doesn't seem very accurate to me, so leave that. So just looking at what pound JPY has done, just from this high time frame perspective, I'm not going to go into the lower time frames much. I will get into it on my trading view forecast. But this was essentially where I took the trade on the Monday. We pushed higher. We were in this 4-hour order block. It was projected from the left, so you can imagine a 4-hour order block in that region. And then we had this first initial reaction, and then we came back into that order block. The order block was obviously then capitalized, and institutional order flow, wanted this to trade higher, which we ultimately did. You can see that by way of displacement to the upside. You can see that by way of these lows being respected here. You can see that by way of these highs then being violated with volume to the upside. So we had essentially formed this lower high, higher high, and then we then came into what was, for me, this order block here, and that's where I was looking to short, because this was the first position I had taken, and take profit was in this region, I think just above these highs here. So that was my take profit from, this position here, right up to that position somewhere there. And then let me just take this away. And then I was essentially looking for price to continue to the downside from this order block. That. So yeah, we got this initial reaction lower, which was a shift of structure on the 1 hour, and that was a potential sign to me that we were starting to head lower, and ultimately form the basis of my short position. And I took that on this candlestick here. You can see that was the London open candlestick, but we ultimately hit stop loss and then closed this closed quite bullish there prior to that Fed interest rate decision, which kind of pushed this position much higher after that announcement. And we've then obviously just shifted, confirmed that shift on the 4-hour, because we had arguably shifted it from this point here and then just reaffirmed it with that low there breaking then that high. And so just looking at the 4-hour closures, which is something that I'm just wanting to pay attention to. On that first trade, we obviously had a bearish candlestick and then this doji followed by the bullish. I had taken it on this candlestick here, the doji. And then, so obviously the candle of and the following candle was in alignment with my trend, large wick to the downside, respecting these lows, and then obviously bullish candlestick in my direction. Looking at the trade that I lost, the candle before, bearish, so arguably in alignment with my trend, that was giving me potential signals to head lower. The candle of the entry, very bullish, arguably, should have been a bit of a warning sign, because this was an engulfing of previous 2 candles basically. And so that is more of a signal of continuation higher as opposed to the retrace before we head lower, which is what I interpreted it as. And then obviously, so bearish before, bullish of, and then bullish on the execution, and bullish afterwards. And then we followed with that bullish momentum. And so at this moment, there's nothing much that I can sort of deduce from, just these two. And obviously, I just need to look over my previous positions and start logging that as well. But I think there could be some correlation there if I look at how the 4 hours behaving in and around my entry area. Obviously, the one that forms before, the one that forms on execution, and the one that forms after. And that could, I don't know how it's going to prevent entries in the case of if, the candles before and of and on my entry are both in alignment with the trend. But, if I'm still in on the candlestick afterwards, that, let's say, this one's bearish, this is bullish, and then this one's also bullish. And that's a sign that, look, the previous two have been countered to me. Then it could alter my management in one way or another. So that's something interesting to potentially see. And yeah, we've kind of just seen a push up from GJ. And we could see that continuation higher, targeting these old highs here and pulling back deeper within this daily towards the 79% levels, or even just the 75 that's resting above this old high here, which is still in alignment with this larger kind of daily push to the downside, or as part of this larger correction. But if we also want to just take it from this larger major swing here, we know that we never fully reach that equilibrium area, that 50%. So price could be targeting that, which is confluently resting above these old highs as well. So we could come into there and then trade higher, but that obviously opens up opportunity for these long positions, counter trend to the upside. What I will just be wary of, obviously, is we are predominantly bearish. We trading at the 79% level of this sort of daily minus swing, if you want to call it, since reaching that premium area that we sold off from, and we're now within an order block of that premium area. And so we could tumble from here. Could have just been a longer pullback to wash out a lot of the sells that arguably caught wind of this bearish trend to the downside, and just reaccumulating before we then reach daily TP to the downside. So I think a few things that could happen on this 4 hour is the trend is bullish. So that opens up these resistance entries to the upside, the correct, and then continue higher. But then because we are on an order block, sniper entries are also on the cards to take it out from this area to the downside. So yeah, high time frame is a bit neutral. So I'll have to pay attention to that IPDA price delivery algorithm just to see which way liquidity is being swept, which way we're distributing, just so that I can position myself accordingly for whatever's going to happen. So that's kind of what I'm seeing on GJ. If you want to see a more detailed analysis, I probably will post on TradingView, either Sunday evening or Monday evening. But yeah, overall, in terms of the recap, a very, very successful week. And yeah, I think don't forget, guys, consistency is the choice you make when you start doing the things you should be doing day in and day out.